This video is good through Sunday, February 21st, 2010. Welcome to freetradingvideos.com in the weekend edition. And on Thursday, the Fed came out and unexpectedly raised the interest rate a quarter of a point post-market, sending the markets into a tizzy until Friday. And then Friday we end up bullish by day's end. Very interesting to see how the markets digested this. We're looking at the S&P daily at this moment. We start falling, turns into the likings of a bull flag, and we pop up over some major moving averages here. But we're pretty overextended at this moment. Finding resistance at the 50-day simple moving average. That's what we have right there. And if you look at the MACD down here, we continue to drop on the histogram ticks, showing a rolling over formation getting ready to take place on the moving averages there. So let's now go to the weekly. The weekly looks pretty bullish. We come up, rising wedge. The rising wedge broke down. We have this little bull pullback, and right here we get this bullish engulfing reversal pattern, and then we pop this week over some major resistance area, including the 20-week moving average, closing near the week's high. Very, very powerful little move there. So the question is how far will we head up? That is a big question. One thing we can do is drop a Fibonacci. For those that know Fibonacci's, you can pull a fib. And so I'm going to drop it there, pull it down to the low, and then come over and see where we're at. If you notice, we're right at the 61.8. Gang, that is a big time area of resistance. If we go beyond that, meaning we get a close this coming week beyond this area, meaning that we're above, significantly above the 1110 area, if that happens, then we have less of a chance of making a new low from this 1043 area. What I think may happen here is that will act as resistance. If that does, this 1110 area does act as resistance, then we have a decent chance on a retracement and blowing through the zero line. But if not, those chances dissipate. I mean, we're going to be wanting to watch this quite closely. Let's also look at the monthly, the big dog of them all right here. Show you a big picture. Broadening formation, a big rally back. Let's pull a fib here. Go from the very high. What you do is you go from extreme to extreme. Come across, see where we're at, and we're hanging up at the 50%. Wow. It needs to get through that and the 61.8 for it to have any chance of heading back to this upper area. If not, we could drop and make new lower lows. That's still a reality even in this bullish market that we're in. Never lose sight of that. The bottom line is things can get hairy and fast. So if we blow this up and really take a look at this monthly, let's talk about what's happening. It's looking quite bullish right now. We came down, we have a lower high and a lower low. So even though it's a white candlestick, that's a bearish move. So it shows weakness in the markets. However, the question is are we making the high for the month right now, and will it come right back down by month's end? We've got a couple weeks here. So we're at least 1 week left to see what will happen. This next week could be a bloody week is what I'm trying to say. So if it's going to get nasty and bloody and horrible out, it should happen pretty quick, and it should happen this next week. If not, if it stays strong like this, as far as the monthly is concerned, this could be the makings of a high base formation, which would be quite bullish in that fact. So it's anybody's guess what will happen, so we just have to play it out to see what does happen. While we're here, let's go to the NASDAQ. We're going to start with the monthly on the NASDAQ. The NASDAQ, we had this big symmetrical triangle, we hit resistance, and now the question is, what are we doing now? Well, We did make a lower high, lower low, so we're starting a down leg. But look how bullish this is, and we're back above the 50-month moving average. Quite bullish, to say the least. Next week, it's going to hold a lot of weight to if this will be a making of a high base or if we're dropping. Because I'll tell you, if we stay strong next week, that's going to bode quite well for the longevity of this bullish sentiment that we're seeing in the markets. Let's go over here to the weekly. And the weekly, we had this rising wedge. We broke down, little bull pullback, bullish engulfing. We pop up above all major moving averages. We are now above the 20-week moving average and the 200-week moving average, closing at the day's high. And let's pull a fib here, extreme to extreme. And we're just above, look at that, 61.8. So that bodes quite well on the weekly. That we did close above 61.8. Very, very nice to see that. And where did we close? Look at 22.43. So we're below that 22.50 area. So wow, very nice. So that's actually in favor with the bulls right there. And if this could keep going up, the question is, can we beat these new highs, 23.25 area? Can we go past that up here? That would be very interesting. See what the MACD is doing. Positive tick on the weekly, nice and bullish. Let's see if we can keep this momentum going right here. And here's the daily. Daily comes up. We are above the 50-day moving average, and decisively so. But the thing that I'm seeing, technically speaking, let's draw a couple of trend lines. Let's take them from the high to the high. High to the high. Look at this. See the rollover that we're seeing? That's a slowing of momentum that's taking place here. So it's a little tidbit for you to see what's happening. And we're pretty extended here. We have a number of candlesticks. 1, 2, 3, 4, 5, 6. Yeah, so we're due for a pullback. But let's see how the markets digest all this. And while we're here, let's look at FinViz. It's always nice to go here to see what's happening in the groups. And for the month, you have basic materials taking the biggest hit, down 4% for the month. Healthcare, utilities, financials in the mix. I really pay a lot of attention to the financials. But for the week, look how bullish we are. Industrial goods up by 4.3%. But what really gives the backing of the markets is financials are up 3.6%. Very good to see that. It's too bad technology was so low. I'd like to see technology actually be up there with financials. And that would be 2 thumbs up for the market. So thanks for being a part of Free Trading Videos. And by the way, we are doing a webinar on market internal indicators that Matador will be doing. It is a phenomenal presentation, and that will be coming up March 4th, I believe. That's a Thursday evening, and that'll be something you can get signed up for. It is awesome. It's going to be talking about the tick, the trend, net volume, VIX, all those indicators that you ever wondered about. It will be a 2 to 3 hour presentation that I think you'll find interesting. So if you have interest and you would like to participate in this, and it's not free, it is only for those that want to deepen their education to a much higher level. It's $200. You can be a part. If you happen to be a student of ours, meaning that you're a mentor student, half price, $100. So if you want to get signed up for that, please do so. Just email Mike_Williams@freetradingvideos.com and he'll get you taken care of. Take care. Safe trading to you all.